What's good, boys? Because I've been procrastinating too much, I decided to hop straight into recording this video. Somebody just asked me, when are you recording it? And I was like, dang, I've been asked this way too much times. So let's hop into this video where I'll be teaching you guys my Asia Session IFUG model in depth. Basically breaking down why it's a good model, what I look for, and when you know not to trade it. And the reason why I believe that this model is one of the greatest models that you can possibly trade, specifically on gold, because it's a JPY asset. During Asia session, gold is one of those pairs that still moves. And one of the things with this model is that it's really easy to kind of stay disciplined to not trading it when you're not supposed to be trading it. And the reason that is because without volatility, this model will simply not exist. So let me write this down for you. So this model is during Asia session, and it's specifically going to be taught for gold. I haven't been trading this model on other pairs. Obviously, it's not going to work on NASDAQ or ES, which are the other pairs that we trade. It will potentially work on JPY pairs, but I'm going to teach it for XAUUSD, which is the gold pair, because that's what I trade, and this is the pair that I know that it works on. Okay, so this is what I look for when I come into Asia session. The first thing is volatility. So it's not no volume indicator or anything like that. The volatility that I'm looking for is simply a move in the opposite direction. And you don't necessarily always know what direction the market's going to be moving in if the bias is unclear. And one of the things that determines the bias is obviously the daily time frame. So what you're looking for is a Asia session that opens up with a clear next target. So Asia session is obviously right after the previous daily candle closes. So in this case right here, the previous daily candle closed and the new daily candle opened. When it opens, there's about 1 hour until Asia session from the open. Actually 2 hours. There's 2 hours of Asia session, or 2 hours until Asia session from the open and from the previous close. Okay, so you're basically trading the power of 3. That's the power of this model, that you're trading the daily expansion. And what this means is the daily candle has yet to expand when Asia session opens up. So I'm going to show you guys what I mean right now on the 1 hour time frame. Or let's do 30 minutes so my indicator pops up as well. So this is the open right here. Or let's start from the close. So I have to go replay mode. Let's start from the close. So right here, it's Monday. It's still New York session right here. And 12 o'clock. So let me just go on until market closes. And boom. Okay, so market closed and the new day just opened. Right? And like I said, there's 2 hours until Asia session. So from 6 o'clock until 8 p.m. EST. That's when Asia session starts. Right? And until then, you have 2 hours. So in these 2 hours, something might happen. Even a big move sometimes might happen. And I don't want to tell you guys not to use this, but sometimes it's not significant, whatever happens until Asia session starts. There are some cases where I see something good, and then I'd get in before Asia session opens up, because sometimes Asia session will just continue the move. So say if from the open I see, okay, we have this weekly target up here, I'm going to get in right now because I think Asia session is just going to expand without coming back, right? So if that was to be the case, you can get in expecting that expansion, catch your trade a little bit earlier. But I don't want you guys to do that. With this model, this is how you confirm whether there's going to be a good move or not. And this is also going to tell you whether you should be trading it in the first place or not. And that is a move in the opposite direction. So in this case, like I was telling you guys in the Discord, that when we closed below this is a disrespected IFUG. So when we closed above it, this was a bullish confluence. But then we came back below it, and I was like, okay, bias is unclear. Because I was expecting buy side from here. Maybe the midpoint, maybe even the top. I was even expecting, once market opened this week, right, from Friday close to Sunday open, I was expecting more buy side. But we ran down, and we ran down lower than we expected, and even closed below the bullish confluence that I wanted to use. So bias was unclear, right? Bias is unclear, and therefore it's actually showing some signs of bearishness. So if I was to trade this with a confident narrative, I would be bearish. So hopping into the lower time frame, I obviously didn't trade this day. But hopping into the lower time frame, and from the open, right, the daily candle has yet to expand. But I know that if we're bearish, because now this fair value gap is once again a bearish fair value gap. So from the open of Asia session, I would be looking for a bearish expansion. And if I'm looking for a bearish expansion, this is exactly what I want to see right here. You guys see how it's moving up even though there's a bearish narrative? So this means that it's moving in the opposite direction of the bearish narrative. We don't know yet if it's actually going to be bearish, but this is the bias that we're coming into the market with, right? So when this happens, you're on the 30-minute time frame, and what you're looking for is simply a fair value gap to form. So this is the current fair value gap, but Asia session has yet to start up. Sometimes you're not going to have fair value gaps in the leg to the left, so what you do is you wait for Asia session to open up and create a new fair value gap. So here we had it right there. Asia session opened up, and there's one right next to price action. There's one right next to where price is currently at. So you mark out this 30-minute fair value gap, and then you wait for something to happen. Okay? So because I'm bearish, I would be expecting this fair value gap that formed to be disrespected so that I can take a short. And the short is simply from this fair value gap to the nearest low. That is why this model is very simple, and it's really nice to trade because you're in and out. And in the case where the bias is very clear, then you actually look for the next daily target because you're expecting that the whole daily candle will expand. Okay, you're expecting this daily candle to expand towards the other daily target. So that's why you're always seeing me catching these trades that are huge. I always enter them during Asia session when I get this wick and ride it from the daily candle open to the expansion, to the actual target, right? Maybe it's this low and there's a fair value gap somewhere down here, right? So that's how you trade this model. But in a case like today where I'm like, I was expecting buy side, but instead we closed back below it, new day candle opened. So I'm expecting this entire range to actually just be the wick of the daily candle and likely getting some expansion towards sell side. That's what I would be looking for. So coming into Asia session, what I'm going to be looking for is a close below this IFEG and targeting the nearest low. Let's see if we get some more expansion. Okay, boom. Okay, so what happened here? Look at this. This is the exact volatility. So up until this volatility happened, there was no trade yet because we have yet to close below this fair value gap. But over here, we got yet another move towards buy side. And this move created this daily wick. And if I'm bearish, then this is exactly the type of stuff I want to see to target sell side, right? So we close below the fair value gap. This is yet another 30-minute fair value gap. And when we close below it, this is an IFEG, and I would use this confirmation to go lower. In this case, that isn't what actually happened, right? We ended up consolidating a lot more than expected, and no real move happened, right? At least not from the target that we were looking for during Asia session. But the idea is that if there's a volatility, and then we close below that fair value gap that's formed when that big move comes into the market, then we have our model and we actually trade it. If this doesn't happen, you simply just wait. If it doesn't happen, then you're not trading. It's as simple as that. And that's why it's easy to stay disciplined with this model. Because if that big move in the opposite direction doesn't happen and you don't have your fair value gap, you're not trading it. Now, I do get a lot of questions about this right here. The stuff that happens prior to Asia session. And so say we're bearish, right? And this new day opens, and instead of running up, we just start running down. But to the left-hand side exists a fair value gap already. So in a situation like this, right, where Asia session just starts moving down, and we don't get the move in the opposite direction, right? We're bearish, but it just starts moving down. So what you do, if there's a fair value gap that existed from New York session or prior to the close, like New York PM session, you can use it, right? And this is the idea of Asia session simply being a continuation. You're simply trading the continuation, right? It's moving in one singular direction, and that's all you're trading. Okay, so here we have it. So if there's a fair value gap that exists to the left, and as soon as Asia session opens, it just starts running, then you can wait for a close below a fair value gap that formed prior to Asia session. You can trade from that. I've done it a lot of times. You'll continue to see me doing it. So remember, this video is kind of to teach you the theory behind it so that you guys can watch me trade it. You can watch the different examples of how I trade it, and then you can simply just interpret it from what you learned and the practical experience that I'll show you guys. So those are kind of the two scenarios where you either get this move in the opposite direction or there's already a fair value gap and then you wait for it to close below and you trade a continuation. Okay, those are the two variations. Either a big volatility comes in, creates a fair value gap, and you trade it. And the reason why I look for the 30-minute is because often too many times I've seen a 15-minute fair value gap that got disrespected and they just didn't pay any attention to it, right? And again, this model revolves around this thing right here, which is the daily candle. It's power of 3 expansion. So do not simply trade this model just because you see this big move, because you're gonna think it's a manipulation leg, but it's actually just gonna be a continuation towards whatever direction it's going in, right? It's just gonna keep going up, and that's where you'll get cooked over and over again because you'll be expecting an IFEG to form and going lower. So you have to use the daily bias. Remember, if there is a daily candle or a daily target, like a fair value gap like this, right here, we closed below it, and we're expecting a fair value gap down here to get ran into, then you have a clear target, and you're going to aim from your Asia session breaker model to go down here. And you'll get a solid 200 pip move. Right? That's it. That's the basics of this model. And that's how I trade it. So let me go into current price action. I think the market's just about to open right now. Or it's already open. Asia session is just about to open. So yet another example, right? Now, remember, it's still a little bit unclear because we cannot be confident in buy side, right? After we disrespected this fair value gap so easily. Like this new daily candle that respected it again is just kind of showing us that, okay, it still wants to go higher. And we do have this weekly fair value gap. So I would be bullish in this scenario, and going into this time frame, I already have a 30-minute fair value gap. I'm not going to look for a big move that's going to end up disrespecting this one right here. I don't want to even see that. I don't want this fair value gap to be disrespected. We can simply use it as a bullish fair value gap and go higher from it and trade continuation. This is one of those scenarios where you don't need the big move that creates a bearish fair value gap and then trade from the bearish fair value gap. If that happens, sure, that's cool, right? But we don't need to see that. But again, let's break down and summarize it for you guys real quick so you remember. So Asia session breaker model. It's a good model because you're trading off the daily range. You're looking for the PO3. It's a good model because if no volatility, that creates a 30-minute fair value gap. Then simply no trade. You're simply waiting, right? You don't have to be on the charts like this waiting. You just check your phone occasionally, doing whatever you're doing in real life, and then if you see it happen, then you can go to your computer, wait for the actual confirmation, wait for the close, wait for the little retest or lower time frame confirmation, and then you get in. Right? Don't be sitting in front of your charts the whole time. Otherwise, you'll be like, oh, this is taking a long time. I'm going to look for another model that doesn't take as much time. No, it doesn't take any time at all. In fact, it's better to not be on your charts. Like the way that I trade from my phone, whenever I see it happen, I go into my computer, wait for the actual close, make sure that it closed properly on every chart that I'm looking at, the futures one, Forex one, and then I get into my trade. Okay. And target. So in a situation where there might be a daily target but you're not confident in it, simply aim for the nearest lows. So the nearest low right here in this case underneath the IFEG was this one, but it didn't give you an opportunity to get in. Okay, so that's fine, just don't trade it. But in a situation where there is a clear goal, let's look at a different Asia session potentially. So right here, big move in the opposite direction, closes above it, and you're targeting simply the highs. So in this Asia session, what I would be looking for would be this high. So obviously right here, what it's actually trading inside of right now is this like gray box is a weekly bearish fair value gap. And it's the first weekly fair value gap we've run into in a while. So obviously this Asia session was bearish, right? So this is the actual model right here during London session that did sort of the same thing, where it swept a high, right? Created a IFEG when it swept that high. Boom. It closed below the IFEG. Then all the following candles respected this IFEG. And this is a 30-minute time frame, by the way. So the model simply happened during London session. And sometimes I would be trading London session. Look at this. Boom. Off the IFEG, ran down. Simple. Swept liquidity, created the IFEG, or 30-minute fair value gap. Then it disrespected it, and then used it to go lower. Right? Simple. In this case, this is kind of the same thing. So if our bias was bullish, then we swept liquidity. We created the fair value gap, first of all, the bearish fair value gap. Then it became an IFEG, and when it tapped in, it gave you an opportunity. It didn't automatically sweep this high. It gave you an opportunity to get in. And once I saw that it would be respecting this right here, I would get into my position and I would target this high right here. Okay? And that's my trade. That's how my trade would be. I would get in right here and I would target this high. It's from the IFEG to the nearest high. Obviously, this is a weekly fair value gap and the bias was bearish. So you would not be looking for a bullish IFEG model if it's bearish. Okay? Simple as that. So don't ask me why your trade hit stop loss if you didn't even look at the daily time frame. Okay, sorry for yelling at you guys. This is the model, 2 variations. Study it in your charts. Okay, don't use this mod or this video as your holy grail. There's a bunch of different variations, right? This is the theory behind it. Learn the theory, watch how I trade it in different scenarios almost every single Asia session, and you'll learn how to trade it properly. That's all for this video.